Okay. All right. Today is Sunday, October 9th, for a top-down analysis for the week. So let's see what the market has in store for us. We did pretty well on our, you know, the trade management account. We were able to get at least close to 1% return for the week, and slowly looking to increase that every week as I start to look for, strategic opportunities and scalping on that while the market is in extreme level. So it need to be cautious, especially when you're having some drawdown on there. So that's what we're doing. So slowly but surely, each week, slowly but surely. Well, Rob, Mike, Matthew, hey Gene, Brad, what's going on, Brad? All right, guys. So let's go ahead and get started. Let's take a look at what's in store for this week. So last week we had non-farm payroll, as you guys are aware. We go to last week. So last week non-farm payroll results were positive across the board for CAD and USD, right? So we'll take a look at the effect of that. And as you guys already know, the US dollar was strengthened and gold was weakened and everything else inverse correlated to the dollar. And then we'll also take a look at what happened with CAD last week in terms of the output on that, which also strengthened CAD, right? And we're doing our live trading on Tuesday, Wednesday, and Thursday. So we're already doing pound CAD, and we were already shorting pound CAD or waiting for pound CAD to turn around. So we were already there. And what's funny how the fundamentals tied into the technicals easy, right? So that was really interesting. So for this week, this is the second week of the fourth quarter. So for today, we really don't have anything, right? And then tomorrow on Monday, we have IMF meeting, FOMC, but nothing showstopper for Monday. Normal ranging conditions, market conditions, maybe more positioning, and things like that. On Tuesday, we step up with a little bit more orange folders. We do have one big red folder, which is the Bank of England. But other than that, from an orange folder perspective, nothing major showstopper. We may see some unemployment rate, some average report earnings for the pound, which may strengthen pound, right? That may show some strength. And then the Bank of England, he may speak, the governance of the Bank of England. So he may say something that may strengthen the pound, and we'll start to see some strength in the pound, or we may start to see the slowness of anything against the pound, right? So it may start off weak, poor, or weak, not poor, but it may start off weak, and then towards Tuesday start to get stronger. So we're going to be aware of that from a technical standpoint. Moving on to Wednesday, this is when it gets interesting. The London session will kick off with pound GDP. So I'm going to assume, based on the previous comments from the pound, we're probably going to start to see some improvements for pound, or we may see a surprise for pound, depending on where the market makers wants to take it, right? They may want to take it down further, get to a key level, mitigate some of the moves that were pushed up this week, last week, and then take it up. Okay, so we'll take a look at the chart and show you exactly what I mean. Okay, and then we have USD PPI data, which will definitely shake up some of the USD. It will either push the dollar up or may turn it around. There's may be some signs, and we'll take a look, because what I'm seeing from the dollar didn't shoot up as much as I would like it to have, to see what it would do, but it did get to a key level, and the next step will be an equal high, or will it reverse? We don't really know, but we will see. We know exactly when to see it, and this Wednesday will be the time to see what the dollar actually does. Okay, so So that would be Wednesday with PPI news. And then we have the FOMC minutes. And that would be around later on that afternoon. So that might be some follow-up to the PPI data. So this might shake up a little bit, and then it may turn it around. We may see certain things. Again, anytime I say a dollar, just think gold opposite. And the indices market, S&P 500, US 30, and also Bitcoin. Okay. Moving on to Thursday is going to be huge. Just almost like non-farm payroll round 2. CPI data is going to be a huge deal, right? CPI data every single month has been phenomenal in terms of the way the market's been reacting. So expect to be some volatility here. This may be the tipping point or the turning point for the dollar on this one right here. I mean, when I see tipping point, meaning going above, or it may go below. In our live trading room, we're going to be following this on Tuesday, Wednesday, and Thursday. Wednesday is available to everyone. Tuesday and Thursday is for coaching students only. Okay. So that would be on Thursday. I don't see anything else that's going to be a big shakeup. It's going to be this news right here. And then Friday, we got the core retail sales. That will most likely be a continuation from Thursday. I don't think it's going to do anything from a pullback or turn anything around. And we got the USD preliminary consumer sentiment report. So this week, it's all about the dollar and gold and probably pound. So I hope you got that listed down. Let's go ahead and go to the charts and let's take it to the dollar. Okay. So this is the dollar. Let's take it to the daily. Right. So we already know. Let's go to the monthly real quick. Okay. So here's what we're looking at for the dollar. We have a very low probability of the dollar going back to January 02 level. And this is the weekly. It already passed our high probability. We're in the reversal zone, or the supply zone, if you will. Right. So this is where we're seeing, and we're talking about it in the live trade room. This is our supply, right? Meaning this is for high supply. We got probably a lot of orders in terms of maybe stops. As we probably have some orders that are, some buy stops, sell stops. So when I say buy stop, means stop losses for those who are already short. And then we'll probably have some stop losses in terms of those who want to get into some sell stop orders. So there's a lot of supply of orders here. There is an imbalance here on the monthly, and we just filled that. Okay, so that gap has been filled. Let me tell you exactly what I'm talking about. By zooming in, you'll see that imbalance. You got a fair value gap right here. You got one right there, and you got a little small one right there. So this looks like it's been filled. Boom, right there. Okay. There is a little small one right above it, and I think that is just about filled. So I think we're good there, to be honest with you. But we'll see. We'll see. So let's go to the weekly. We see where we had a high spike. You see it there. We had a high spike of 114,228. So it created like a pin bar candlestick, which is a reversal sign pin bar. And then the next one, boom, we had a drop. It came back up, and then the candle closed right there. So we have a hammer, right? So that is another inverse candlestick pattern on a weekly. So anytime you see something like that on a higher time frame, these candlesticks are pretty reliable, but doesn't mean it's guaranteed. Okay. So right now we're sitting at about 112. If you go to the daily, let's take a little bit closer look on how that candlestick, this weekly candlestick, went all the way down and then closed bullish. This is what it looked like. So on the daily, we see how it went up, came all the way down to our key structure there, right here. right where I had it, and then it bounced right back up to where I would expecting it to go in this zone, right? So that's exactly what we just saw. Now, what we need to see this week is what is the dollar going to do from this point right there, right? Two things it can do. It can range a little bit, maybe push up a little bit, do a little bit of a fake out, and then CPI news data boom, come right down. Or CPI news data come, and it shoots right back to the equal high. Two scenarios, and these are only two scenarios will happen, one or two. The good thing is, we know it's going to be either one. Take a guess. No one knows. However, what we do know is that we got two levels here. We got one, we got two. Okay. So if it goes up, does this mean that the dollar may not turn around? It does not mean that. It could be just a retest of the equal high, and then boom, right? The thing is this is the most important thing when it comes to understanding the dollar, right? Number one, when you're looking at the weekly, looking at the exhaustion of the market, which side would you want to be on, right? Look how long this thing was bullish, right? Look how long this thing is bullish. There is a difference between the two. And if you don't notice, it's the angle. This is more like I want to say maybe a 50-degree, not quite 45 degree. This right here, this is a 90-degree vertical, right? To maybe about 70 degrees. There is a big difference between these two. So that means there is a big difference between these two. Now, between those two, once it reached to a certain level, did it go down? Yes. Yes, it sure did. In fact, it went all the way back 100%. The question you need to ask yourself is, are we there yet? Are we there yet? Are we there yet? Are we there yet? One thing we will not be doing is taking a chance on buying the highs of the dollar. So in other words, we're not going to sell against opposing currency, right? And if you do, you're scalping for very, very short pips and you're looking to get out, okay? Because if you keep shorting, say for instance, keep shorting EU, GU, GU, hopefully you're getting small scalps here and there, but get ready to lose one because you're going to get one that's going to bite you, right? And hopefully you have a stop loss so you get stopped out when the dollar does turn around, okay? This is just basically on the weekly. You throw the monthly in there and you got the same similar picture. Very high level. This was high, and if we're at that same overbought conditions, strong exhaustion, extreme levels, high, the dollar is going to fall, and it's going to fall hard, making it look like a crash, okay? When this day comes, everyone's gonna be like, oh my God, I see it. We saw it here, we saw it there, we saw it here, we saw it here. And we had to be patient to wait while it was going all the way up against us, towards this 20-year, 2-year high level, all due to inflation and rate increase, right? This is very, very high, and you're gonna expect to see the dollar get slapped down. This is all technical, okay? Not just what Leonard says or what I feel or what bias I have. This is all looking at the technical. This is on a monthly basis back to 2002, looking at the ebbs and flows, looking at the exhaustion market, looking at how the equal highs came down, created an M, equal low, created a going up, and formation coming back to a level right here, which is equal to these two, these three, these four, five, and maybe some more levels, came right there, came back up with this equal high, came back down 100% retracement right there to this equal low, high, high resistance, past resistance equals past, current support. And then it goes up, it goes beyond 100% retracement into extreme level, exhaustion, beyond historical level since 2002. You can expect this is going to fall. Plain and simple. So that has not changed, and it's even stronger than it's ever been. This is just about being patient and waiting for this to fall, okay? The point is, are we there yet? And is this week going to be the week, right? Because this could easily create what we call a choke situation. That's a choke, which is a change of character. This is a very strong market structure reversal pattern, right? It's when you have a high, a higher, I would say a lower high, right? Or it can be as much as even an equal high. So either equal high or lower high. And then you have this break of structure right here at this neckline. You have a change of character. So that's why I kept saying to all my coaching students in the trade room, until we have that break of structure, which looked like we almost did, people started shorting, it got smoked, stopped out. That's why you don't do that. We're waiting for this break of structure. Once we have this break of structure, we're going to come down to this structure. We'll come up, we'll retest, and then boom, come back down. We'll retest, and then come back down. And we may do some more retests, maybe some more ranging, and then come back down, okay? This is going to happen. When is a question that I don't know. I have no clue. I can't tell you when. I'm not going to guess on that. I'm not going to plan on that, because when is when nobody knows but the market makers, right? Which direction is what we can be able to determine based on technicals, based on fundamentals, and where we're at on the equilibrium cycle, right? And I can tell you based on that, we are definitely at the top of the equilibrium cycle for this pair. We are right here, right? And if we're right there, that's one area on the mark that you can say, hey, you are here. And if you're here, don't think you want to buy. I think you would want to sell. Okay, that's very, very important. So that's where I am at. That's my bias on dollar. So we are looking for those breaks. Make sure you mark it on your chart. We're looking for that break of structure of the dollar. But if you're not following the dollar, I'm using the dollar to correlate to what we're getting ready to see across the other USD pairs. Okay, so I'm using this as an index. You get this, you got 70% of the market. Okay, this is, if you just trade majors, that's all you need to do, and you can just follow the dollar to do everything else, including gold. Okay, so with that being said, let's go ahead and go to gold. So here's gold on a daily. In fact, let's go to the weekly. Okay, this is the weekly chart. This is gold. We had this equal high. This high was the Russian invasion. This was in March, end of March. The Russian invasion happened. And then we had this whole vertical move, right? This vertical, almost 90, between 90 and 70 degrees. And then we have 50% snapback. And then it just slowly drifted down. And it came down to this level right here, about 1700, 1694. Key historical level since June 2020. and then we bounce off of that level. And then we marked up this level that says high probability that this pair is going to come down, right? We called it, and guess what it did? It did not bounce off of that. It did, and it bounced all the way past our key level of 1694, which is the key support level. It went all the way, again, to the level we said, and it bounced all the way up last week. It took that in 2 weeks. 2 weeks, it went all the way back to that key level, past that key level, and now we're sitting right at it, right? And I said, and I had called it a couple weeks ago, that this right here is our buy zone. That is a very high demand area. Mark that up again. This right here was a very high demand zone, And we say this is a high probability and high probability lower zone. This is the top of the zone, the lower zone. It was either going to come here or it was going to either come here and it was going to bounce. This right here, if it came anywhere in this area, this was a very low probability, but also very high. This is high. This is very high demand. Very high demand, meaning you should only be looking for buys. In a downtrend, come to my coaching and I'll tell you why. Mean reversion will save you a lot of headache in the long run, okay? And you'll learn that strategy. But right here is where you want to be looking to buy, not looking to keep selling. If you want to sell, you should have sold it up here. You should have sold it right there. You should have sold it right there. And you definitely should have sold it right there. But guess what? Who's selling while it was driving up? Us. Not retail traders. It's going through the moon. It's going to keep going. And it slapped down and hit all those stop losses, And every time somebody kept trying to buy it, trying to make up for this, got slapped down with a stop loss, trying to buy that, got slapped down with a stop loss. You know what I mean? And you just got to give up after one or two, especially after losing so much. Okay. Here is where you are wanting to buy if you're not already in the buy. Okay. So let's go to the daily and let's take exactly a look at what's been going on. So we got this trend line up here marked up from August 22nd, and you can see it nice bouncing off that trend line. Just looks pretty, but it really doesn't mean a damn thing. To be honest with you, just looks pretty. Just kind of give you an area of reference. Okay. So it came here, it bounced off of there, that's fine. It broke that structure, came off of here. It went up to this structure. The trend line is one thing, but here is the key piece. The trend line is just a reference, but that, like I said, just for visual appealing, this is the key part. It's right here. Right there. And you got an imbalance. You got an order block sitting right there. That is the significance. Point of interest right there. And it hit it. And now it's coming back and it's retesting this level. Okay. Everything is with this level because of the simple fact that it was a very strong level way back here in June 2020, March 2021, April 2021, August 2021, especially back here in April 20, here as well. That was a resistance of March 2020. It was a resistance in February 2020 before it dropped all the way back and then finally broke this resistance, becoming support and went back up, created this equal high way back up here when it shot to a record level of $2,000 per gold. Come back here to create and bounce these levels, come back, create that equal high. This was the Russian invasion. Why did it stop up here? Why didn't it keep going after the invasion when everything becomes a risk off sentiment market during the war? I don't know. Just seems like a very good area to stop. Hello, market makers know exactly what they're doing. And then take it back down, 50% snapback. That's exactly what this 50% was because of the movement of the market. And then it kept going and drifting down coming into this level and coming back to these levels again of area of demand. Okay, hope that makes sense. So with that being said, what are we looking for? I just drew it for you right here. So there's two things that this can happen now. And this will all be predicated on what happens with the dollar, okay? So this is what I mean. If the dollar gets stronger, this is going to go all the way up to that equal high, equal low. This equal low will be equivalent to the equal high of the dollar, okay? If not, that is one scenario that we are going to see to where it will bounce or it will just keep going, okay? And it can keep going to that key level of this bottom range, which is a high probability before it even goes to this level, low probability. It has to break this zone for me to say, forget it. We're just going to fall and we're going to come here. For this to happen, dollar has to shoot past the high equal high, okay? So you can just pay attention to this and automatically assume what's going to happen with the dollar, okay? This goes down, that's going to mean the dollar is strong. That is one scenario. The other scenario, it can just range here and then boom, it shoots up, right? CPI data news came up, boom, dollar gets weak, goes, shoots up, and it goes here. Now, the question is, are we ever going to see gold come back up in this level? And the answer is yes. Unequivocally, it's coming to a chart near you. I can promise you that. Why? All because of US dollar, right? Dollar gets weak, inversely, this is coming. We are going to see this level, we are going to see this level, and we're going to see the break of this trend line, and we're going to see, look at this. Either we're going to see this or this, and it doesn't matter. We need to see that break of structure. And once we get that break of structure, and I just drew that pattern out, you get, this is just inverse, you get this high, higher high, or higher low, right? And then if we get a low like this or an equal low, either way, and it comes back and it breaks this structure, kind of look like an inverse W, but it's basically coming back to this point of the low or the equal low, and it breaks the structure, we then have a confirmed change of character, which is a market reversal pattern, smart money concept pattern of reversal confirmation. Okay, so you can do either or. You can put that trend line there, or you can just understand the market structure change of character for this to happen. Again, this will happen equally to the US dollar at the same darn time, right? Now, keep in point that on the weekly, one more confluence, on the weekly, this is kind of the one of my stochastics down here. You can see on the monthly, we're at the mid level, right? We're at the mid level, meaning we could come back up right here. So that means the buyers are still in control. But when you come to the weekly, you can see that we're in seller's control, but the key point is this: we're in market exhaustion, right? Market exhaustion that we're down here. And when those market exhaustions happen, and when we're at that key level, that's when we're at the key demand area to where we should be looking for, we should be looking for buys, right? not for sell. We should be looking for buyers. You want to sell. Like I said, you should have sold from here. You should have sold from here, and definitely from here. This is not the area to start looking for sales. This is an area to start looking for confluence of the reversal. The market is starting to reverse, right? It's only going to keep going lower and lower and lower until it gets into an area where they have reached a point of they have enough accumulation, right, to come back up and start mitigating some of these gaps. Okay, so that's just where the market operates. Let's go to the S&P 500. Take a look at that because the stock market is going to give an indication of the bond yield as well as the dollar. Okay, so you can see where we talked about this, where the market, if the market comes, it would have to drop below that chart to come to this high probability area of where we're saying this would probably be the point of exhaustion of where the market will say, okay, this is enough a recession move. Let's now rally back up. This is a very high probability zone. The next zone is right below it, right? So in these two areas is where we're going to see where the market is either going to reverse this point at this point. You can see the market, how it rallied it up and everyone thought it was going to be rallied up. And then it came right back down to this low on non-farm payroll. So right now the market is looking very, very bearish, right? At this point. And it looks like it is heading down to this level, right? For this to happen, that means the dollar has to continue to maintain the strength, right? Now, when this bounce either here or here, and it will bounce at either one of these points, 1 or 2, then we're going to start to see the dollar get weak. And this is going to be a reversal point. At the same time, gold is going to start making this move, right? Now, why are those targets significant? I've talked about it in the previous recording. And if you guys are not aware in terms of historical market corrections when it comes to the S&P 500, on an average, it's between 27 to about 30% for major market correction, right? It's like just from here to here, like from here to here. That was a major correction. That was a 20% correction. We had the COVID situation that was here. This is on a weekly chart, guys. So here we had this major correction. That was a 32% market correction. And then we had this market correction here. That was like a nice 42% market correction back in, let's see, this was 2008, 2006. Anybody remember any type of mortgage crisis, anything like that around that time, 2006, 2008? Some people probably got some really good buys on some real estate, and some people probably had a hard time getting some real estate during that time, right? That was a major market correction. Okay, so anytime like that, that's on an average between 27 and 32% correction, market correction, before we start to see a reversal historically, all through the historical level of the market. Right now, the market has already corrected 24%. We are at that threshold historically, years of S&P 500 history of the market major corrections. We are in a recession. I don't know why people are saying, could we be hitting a recession? We're in a recession from a market technical standpoint, right? Prices are through the roof, inflation is through the roof, and we're now starting to raise interest rate, and the cost of borrowing, of course, is more, right? So we're at a 24% correction. Now, the market goes lower to that target, we're talking about a 29% correction, which is like ding, ding, ding. At that time, it's like any minute now. And if it goes all the way to this low probability point, which is at this line, this threshold line of market structure, we're talking about a 38% correction. That would be extreme. And I don't see it going that low. If anything, it could probably go here more than here, right? And going that low would be like a 33% correction before we start to rally back up. And we will rally back up. The stock market is, the United States stock market and S&P 500 is, you know, everybody's 401k. The government's going to step in and get things turned around by then, right? The last time we had a major correction like that, now you would think this was bigger compared to this, but from a percentage standpoint, that was 35%, right? What was that? That was the COVID situation in February, March 2020. That was the correction of the COVID situation of the pandemic breakout news. This right here, from this point is a 53, right? That's the high of that mark. But if you wanted to go to the absolute high of that mark, you can go from here all the way down to that lower, and that's a 57%. This was the mortgage crisis. Look at that. Ooh, look at that big drop from the high when S&P 500 was trading at 1588, and it dropped all the way down to 674. Ooh, that was like a big crush. Okay, when that happened, oh, not only did we go into recession, this is going to be going down in the history as the what? The Great Recession, right? They want to call it the Great Depression. This was the Great Recession, right? This is the pandemic COVID situation right there, right? I'm sorry, right here. This is the COVID situation. This right here is just a recession. That's it. The inflation recession, which is typically normal, and we're going to see an average. So these areas, it's very, very, very high. It's like the force of the market. This is the natural, the dark side force of the market that you just kind of know from historically experience that says this is like anything lower than this, than the market, anything else previous to what we ever known and believe will not even be worth even trading or even looking at it, because you can't even trade it. It's whatever, right? But you got to be able to trust your instincts. You got to be able to trust experience. You got to be able to trust data to say that this is a very high probability of the market moves and reversal at this point. Okay, so I hope that makes sense. Okay, so that's the S&P 500, NASDAQ, US 30, they're all going to follow the same. Okay, so let's look at Bitcoin. That's also the other correlated pairs. Like I said, if dollar goes up, gold's going to go down, S&P 500, and then also BTC. Dollar goes down, market rallies back up, gold rallies back up, and also BTC, right? That's all correlated, right? You got to follow it all. It makes sense. Okay, so this is on a weekly chart. We got some very key levels here. We got a very strong demand support level. What price is currently at right now at around 19.4, 19.5. It's been hovering around this level. Look it. This is all where that, look at Bitcoin just hovering around that level. Hasn't broken that level, right? Hasn't broken below 18,151. Been hovering around this level. Look how long. Let's count. 1, 2, 3, 4, 5, 6, 7. And then it bounced again, 8, 9, 10, 11, 12, 13, 14 candlesticks has touched this line, basically. This is 14 weeks. It's been at this level. 14 weeks. Put that in perspective. All right? That's almost 4 months, 3.5 months. That has been just hovering around this level, right? So this is a very strong high demand. This is a medium probability of it dipping to this low. I don't see it going that way, but it is a very medium probability that if it hits it, I won't be surprised. It goes here, I'm shocked. Very low probability. Anything below this point, it's not even worth mining for the miners anymore. And then plus on the year eve of the Bitcoin halving that's coming up, that's even going to shorten the supply and create more miners to take longer to mine Bitcoin. I don't see it dropping below this. We're gonna go back here to 48. We're gonna definitely see 52. We're definitely going to see 60. We're definitely going to see this level right here at 62, 69,000 and beyond. Right? We're already at a nice 72% crash, if you will. Crypto crash. This is crypto winter. This is what crypto winter look like. This is crypto winter, right? This was crypto winter. This was crypto winter, or Bitcoin and Bitcoin winter. And this was definitely the Bitcoin winter, but it's about over. Any moment now. Let's take a look on that daily. What 14 weeks look like. This is what a 15, a 14-week range look like. Just doesn't want to get out, just doesn't want to break out above this 25 that we were once up, that everyone thought we were going up, and then they started buying, they started getting stopped out, right? This is where you want to hold, and just hold a dear life. If you're a hodler, don't even let it go. If you haven't bought any, and you waited 14 weeks, today seemed like a very good day to go ahead and buy some Bitcoin. Anytime now, right? Okay, so I see definitely this is coming up, right? We're waiting for, the dollar, right? That's basically what it is. We're going to see the dollar, and we're just waiting for this to go up, right? And it's going to break. It's going to break out of this range, and this is the range that we want to see it break out of right here. I already got it marked up. Just need to break this 25,000. Right. Once Bitcoin breaks up and it comes down, we're in this range. Right. We need to see this break. Once we see that break, it's a done deal. Hello, 30,000. It's coming. Once we see this break, again, this break structure right there. What is that structure? That structure is, again, 25. I would say 25,000. That's that $25,000 mark. Once Bitcoin gets around 25,000, hello, 30,000. Come back and retest that 25,000 or somewhere in here, and then boom, we're going to the next level, which would be the 40,000. And then we're just going to keep going. We're just going to be like, some type of auction. 25,000 going once, going twice. Everyone's going to be going to 30,000. 30,000 hitting once. Anyone hitting 30,000? Anyone believe it's going to go to 40,000? Boom, and it goes 40,000. 40,000 going once, going twice, and it's going to go up here to 50, 48,000. 48,000 going once. It's just going to go just like that, and people are going to be scrambling to buy Bitcoin as it was going sold. Right? That's exactly what it's going to be looking like. And you ain't buying here. Hello. Okay, so that's Bitcoin, and that's what we're looking at right there. Let's go to our Forex pairs. Let's start with Euro USD, because we had believe and we're following the dollar. And look at that drop. Lo and behold, let's go to the weekly. What that look like on a weekly? We're at the top of the market and the bottom of the market. Do anybody want to buy the bottom of the market? I don't think so. Right. This is the fifth premium and discount area. Right on the top here, this is the 50%. This is that 90%, 70% angle. 50% location is 108, and we will be coming there very, very soon. We're already below parity. We've been hanging around below parity, around 97. We've been hanging around there for about, I want to say almost a week. Let me go here. So this is that nice, beautiful trend line that we're looking to see a break, and it went up. We thought it was on a bull run. It did the same thing, just like this, right? So we are seeing a correction. It is looking bearish, and we need to see right now what the dollar is going to do. If the dollar is going to keep going up and keep pushing it, then we're going to go below this record level and create another record level low if it breaks below 95 cents. My guess is we're going to range around here, right? And we're going to see at CPI data, do we touch this and finally come back, or do we break this for even a little bit more lower, right? You just kind of think, how much lower do they want to take Euro USD? How much? How much lower does the market makers want to take? Euro USD. There's nothing else down here for the market makers to take. I mean, there's really nothing. Everything that's up here, all the orders up here are up here. All of the imbalances that are up here has to be mitigated. Is it coming up? Absolutely. The market, that's what the market does. Look, market comes up, comes down. Is it undervalued? USD is way undervalued, right? We haven't been here since its inception back in, let me see, there's another historical data. Here you go. Euro USD, way back here when it started in 1971, when it was been trading. Euro USD, right? This is, we haven't been below this level since 2002. Well, well below that, right? So this is kind of similar to, I would say, dollar. They're almost inverse correlated to the dollar. And I can tell you that we're in a very high key area of demand area to where we should be looking to buy anywhere now, anytime now, right? If we're looking to get to this level, we're looking to get this level, and we're looking to get to this normal range of where the Euro USD has been trading, okay? We've already been hitting way below. The dollar's not going to keep going. It's not going to keep going. It's not going to keep going. Not this low. Not when we're already sitting that low already, right? We've been sitting at this low, extreme low on the weekly more than we have ever have been, okay? And you're sitting at the daily, we're waiting for it to come back up. Again, same structure. We're waiting for this break of structure. We're waiting for this trend line break, and we need to see it come back up to 101 before we can say we possibly have a break of structure and a change of character for Euro USD to come back up. But right now it is looking bearish, and it is waiting for either CPI news to take it to the equal low and beyond, or a reversal and coming back up. Pound USD is going to be a similar story. If you look at Pound USD, we saw this nice flash crash down, and then we saw a nice 100% and probably 125% recovery, right? So the Pound USD went all the way back up, and then it finally closed in the middle, right? This is what a weekly candlestick looked like. 2 weeks. Come back down, come back up, and create a nice inverted hammer, right? This is a reversal candlestick pattern on the weekly. Okay, so again, is a dollar going to keep pushing it and keep it pushing it down to these low levels right here? This is a key level. This is another key level. And this is a key level. So which one is the dollar or pounds going to bounce off of? It's either going to be that one, medium probability, or is it going to be this one, like I said, for a medium probability, or a very low probability we're going to see that, okay? Either one of these is going to happen. So right now is that Pound USD is looking bearish. Right now is what's going to be happening with the pound news coming up. You got pound GDP news. At the same time, we got the CPI news. Could it happen about that point where we can see the reversal coming back up to retest these highs, or is it going to keep pushing further? Pound USD got more room to the downside than it is to the upside, okay? There is a slightly imbalances here, which is a perfect time to get here. So, yep, there you go. You called it right, Brad. There's a nice imbalance here. If I were to trade it right now, I'd be scalping it from here to here. That's it. I wouldn't be looking to sell anything below here. If it gets below this level, I'm looking to buy. But right now, it's not the time to look for buys. And not in this level right here. It needs to come down. And if we throw like a fib, let's throw a fib here, right? It's got to get below this level before I even start to get into a buy. Right now it's in a premium. I need to get into a discount zone. So from here to here, just swing low to swing high. It's not even there yet. We're talking about a 3.32 level of fib. I need to get to at least 50%, and somewhere in this area I'm looking to buy. Okay, so that's pound USD. It's bearish. Let's go to the next one, odd USD. There we are. We're at this level. We're right in this level. For some reason, we're right in this level. And this is the high probability reversal. This is medium. This is low. Okay. So right now it's looking kind of bearish. It may go to the next level, but these two levels right here, again, this is where I want to buy. Where I want to buy. We got a lot of imbalance here as well. Okay. Got a lot of imbalance here that it's got to come up and mitigate. And there's a big one sitting right up here, way up here. Okay, there's a small one right here. So it's got to come up to this level, and it will. It will. The point is, at, at what point? Is it here, here, or here? Pick one, right? And if you haven't got into this trade, you can do a small buy now, get the next one here, buy here, and hope to God you trigger yourself right here. Could you go into a drawdown? Sure. Would you rather go ahead and try to buy and take here and take a stop loss, take a buy and take here and get the stop loss? Pick one. You got to do one or the other. You got to do a stop loss or you got to do a drawdown. That's the risk and cost of doing business in trading. Got to pick one. You're not going to just guarantee you put a sell and just guarantee you're going to be a profit, right? You're either going to go into a little bit of drawdown, you're going to have to hold it, or you're going to have to put your stop loss because you don't like holding drawdown. Take the loss, take the L, have a reduction in your account balance, and then go right the first time and break even. I don't know about that. For me, I picked the lesser of the two evil. Okay, but those are my two areas of where I believe you know, Australia is going to go, even though it came from this high right here, that area. This is where we need to see this break of structure, because this is that little zone that is in right now of this price right here. This price for odd USD is that 65 cents, that break of structure. This is that zone we're in right now. So what we need to see is, are they accumulating to go down and retest, which is a liquidity purge right there? Or are we going to be going up, retest, and then go from here to go back to this level, take care of this imbalance right here? Those are the two scenarios, 1, 2. But it's definitely going to hit this one, one of these three areas. That's what I'm looking for. Either way, this is where you want to start looking for buys. Okay, especially when you got this, like this, where it bounced up, it bounced up. I hope all that makes sense. So it's looking kind of bearish, but it's at a very key area. This is more prime and ready than it is with Euro USD and Pound USD from a structural standpoint, because we're at some key levels here. That doesn't mean that it won't be able to go to this level. Like I said, this is a medium probability it will go here, but you got to make sure you be ready for it. This is that mark where it says 62 cents, low probability is at 60 cents. Those are the structure that I built off of these structure here, right? I don't see it going below the structure. All this was an anomaly. This is more like some type of event that occurred with Australian dollar back in March 2020. Anybody remember what happened in February 2020? I do. Sounds like the COVID situation. Yeah, that's an anomaly, right? That's what I'm talking about from an anomaly. Right now, Australia is not in that situation to where they're having any type of COVID situation other than inflation, right? We just come back here, we're going to retest, and then come right back up. That's all. We're not going to come anywhere lower than this. If it does, it'll be a shocker for me. I doubt it. They don't need to. There's no imbalances at this level. All of that, when we looked at it, it's all balanced. All of this is covered. That's covered. That's covered. This is covered. There's no more imbalances there. There was a little bit of small imbalance there. There's probably an imbalance sitting right here, if anything, but I don't think it's going to come down as low. It doesn't need to be. Okay. So that's all. USD, believe it or not, NCD USD looks same damn similar, doesn't it? How ironic. That same dip back in March to February 2020 with the COVID situation. The only difference is between NCD and RUSD is we went down to that level. We're there, right? So we're in a prime. This is more prime than RUSD. If I put a quality on, I'd be buying right now NCD USD. This is actually a buy zone, and we've been in the buy since if we can drop below this level here anyway. I'm looking to take this and ride this all the way up, and it will. It's going to come back up. Let's go to the weekly. This is what it looked like on a weekly. We had a very strong level here. I had this as a very low probability. This is a very strong level. I don't see it dropping below here. Doesn't need to be. You go to the monthly. I don't see anything like that that needs to go below that level. Not without, especially when it's low like this. It's very low. It's got to come back up with some mitigation. And I see it coming back up at least to this level. I don't think it's going to come all the way up here to this level, but I do see it coming back up to this level. Okay, so we're definitely in the area of buy zone. This is extreme. If you put this on a weekly swing high, swing low, we're at 100% retracement right here. Right, anything below that, which is insane, but for that to happen, the US dollar would have to go insane high. Okay, that would have to push the NCD USD. Okay, let's look at the other dollar crosses. Let's go to USD CAD, and then we'll start going to the JPYs. We'll use USD CAD and we'll go to USD SHA. Okay, so if you were in a buy or sell with USD CAD, hopefully you got out as you were buying here. You probably broke even, but if not, it is coming down. This is the historical high here of 16 and 2020, right? Looks pretty high. Could it come up here for the third time? I doubt it. This is a very low probability for it to come up here. Dollar would have to go ballistically insane crazy as it is already from where it's at to go way up here. No way, right? It's going to probably hit this level. This is some nice reaction. It's almost there. It's not quite there, but this is a very strong level of where it's currently at right now, right? For it to go here, it's a low probability. If the dollar pushes up, that could happen. If it does, with that kind of movement and this kind of vertical movement, what do you think? I think I like that 50% snapback from right here, we're coming back to this level, right? So if you're short, hold on to your short. If not, get ready to be short, right? And you can go short now, you can go a little bit short high, you can go a little bit short, a little bit higher. But right now, it's looking bearish, right? Got that bear candle here. Let's go to the daily, see what that looked like. It went to the high 138, came back down to the 134, and it looked like it's trying to come back up. And it looked like it wants to give us a choke situation, maybe. No, it's possible, right? That would be a choke. But if the dollar push up, could go equal high, could touch that. Who knows, right? So that's what we're going to have to see what's happening with the dollar. So on CPI news, I can tell you technically everything is against the dollar as of right now, especially when the dollar is trying to push to the equal highs. It's not even there yet, but everything else on the currency pairs is showing extreme levels of lows on the Euro USD, Pound USD, NCD USD, Odd USD. We saw that. And now we're looking at US CAD and we're saying this is extreme level high. No kidding, right? Especially look at this vertical move. Are you saying that? Yes, it's coming. Look at it historically. It's happened. Look at the exhaustion level. All right. Trade what you see, not what you believe in here. Trade what you see. This is exhaustion level. This was exhaustion level, exhaustion level. Each time it did that, you guys can already see it. Each time it did that, you guys tell me. That was low, but this is high. This was high. What do you think? This one a little bit. That is a divergence like it ain't no tomorrow, right? If it ever is one, that is one right there. That is a clear divergence. When you got price going up, you got momentum going down. Hello? You don't think this is going to go down? Really? You don't think we'll ever see these lows again? Oh yeah, it's coming. Okay. So I'm more bearish on USD CAD than being bullish on Euro USD and Pound USD, even though they're at prime to either come back to the equal low or get ready to go bullish, depending on what happens with the CPI data and how the market makers. So it's really about this. I know the market makers want to take it back up, and they will. In other words, I know they're going to crash the dollar. It's just when they want to, right? I'm waiting for them. And once I get a confirmation from them and they reveal the playbook, then we'll be ready to make that move. But other than that, I can't call it yet until I'm waiting for them to tell us, right, what they're going to do. So let's look at USD This was just looks similar to USD CAD, but this is a very extreme high right here. 2022, June and May. This is literally like 2 months apart. Give you a quick double high. Did you think it was going to keep going high? Did you think this was keep going high? It looked like it, but it didn't. That's what it did. It crashed. This looks like a 50%. How about this? If you were seeing this, what would you think? Oh my God, USD SEP, it is going through the roof. Are you kidding me? It went from here to here, and it was 854 pips. It is going through the roof. It is never going down, right? It is vertically up, and you should be doing nothing but buys. And if you're thinking about selling, you're the sucker. Oh, really? Okay, boom. How about that for you? 50% move. Did it do it? Come back here. Oh, it came down to that 50%. That is exactly what we're looking for. When you get a vertical move like that, yep, another vertical move up 50%. Wow, that's weird. Did it do that back to back? Did you see that 50%? Vertical move 50%. I don't know. Maybe this pattern is not really. When it goes back to back, maybe that really doesn't happen. I need to see it happen more times than often, right? Look at that. Not quite vertical move, but it did more than 50%, right? Came back, hit this level, come back, hit this level, it'll come back. Yep, boom, come back. Are we there yet? You guys tell me what's going to happen now. What do you think? What's going to happen? You guys saw how this play out, right? Just showed you. You think we're there yet? It's coming down. Oh yeah, it's coming. It's going to come back. We're going to be in this move coming down. Okay. So I have this marked up here just for the simple fact that it could come. It is bullish. USD chef is bullish. And if USD keeps going strong, this would push towards this level, right? It could break out of this trend. It could. So right now it is bullish. I wouldn't look to buy. I'd be looking to sell, right? If you want to put a sell stop there, you want to put a sell stop there. Where is that there? That means you can put a sell stop at this price, 0.99. You can put a sell stop on USD chef right here at 0.983 and hope to God it fills you in and walk away from the chart and put a TP here at 0.97. If you want to put a TP and wait for longer and get longer pips, 0.94. This right here would probably get you filled within a week. This will probably get you filled within a month. Okay. It depends on what you want. You want to take it from here and get 244 pips, or you want to take it from here, hold it for your life, and come back and get 559 pips. Pick one, right? Me, I think it would probably be great. Probably go here, put a TP, reload a sell up here, hope it comes back and retest it and come back down. And then if it comes back down, put this as a reload, put this as a sell, come back up, touch that, come back down. Either way, you're going to be a winner, right? So this is a great thing about having a market understanding, to know that you're at a very high level of supply. You should be doing nothing but looking for sells in this area. Sell, sell, sell. This was a nice sell, right? This is a nice sell, right? All of that is a nice sell. What if it goes against you? You still get the right thing. That was a sell. I wouldn't told you to buy, but that was a nice area to sell. I wouldn't buy the highs. We don't buy previous highs, right? If you wanted to buy, you should have bought down here, right? When you took TP, it went up. TP, reload, came back down. If you would have done that, you would have made more money than you would have ever thought of, just that alone. Let me tell you what I'm talking about. Like this right here. From here, at this level, let's say at this zone right here, from here to about right there, that's 210 pips, right? 210 pips. It came down here, 210 pips. Came back here, probably about 200 pips. Came back here, 210 pips. And it's almost here again. So it would have reloaded twice, if maybe 3 times. You would have had at least a trailing stop loss that would at least got you 100 pips. Either way, you would have made 300 to 400 pips on that alone by just reloading TP, reloading TP. Now let's flip it. Sell TP, sell TP, sell TP, goes lower, sell TP, sell, right here, TP, sell TP, okay? Either way, USD sell, it's looking bullish right now, probably a little bit higher. You can probably sell right here and you'd be fine. You can put a little small if you want to. You can put a little, like I said, a little small sell, or you can put a sell stop here, sell stop there. But if it does go higher, get ready to sell here and cost average that in, or you can do another sell, right? Cost average in. Right, you don't go higher lot size. That's martingale, right? You don't want to do that. The same lot size. Stay within your position. If your position is 0.5, right, you can go 0.02, 0.02, 0.01, whatever, however you want. If it's 0.1, build into position, put multiple bullets to build 2 positions. You're not going to catch it perfectly, right? You can't get one. You're trying to get it within 5 bullets, right? You got 5 bullets in the round. You're trying to catch it. You don't want to catch it with 0.10. You put one right here and go with 1 bullet, and you got all of this against you. Who does that? Probably 90% of the retail traders out there. I know it's what they've been taught. All right, let's get to the next one. Usdjpy. How's that looking? What do you guys think? You guys have been watching us already for almost an hour. What do you think? Anybody want to take a guess? Even if you're new, you want to take a guess? Even if you don't have a lot of my coaching training, you want to take a guess what most likely is going to happen? Anybody want to take a guess? What percent level? I'll just take it from this one right here. Anybody want to take a guess? Jeez, how about all the way down here? Anybody want to take a guess? Why would that be a good level? 50%. Yeah. How about this? Ooh, like a nice confluence level there. Would you agree? I agree. I think that looks beautiful anywhere in this level, right? We got a 90-degree vertical move, and we got about a 70-degree angle right here. Anywhere in here deserves a 50% slap. I'm gonna call that 50% slap. I like that. Just slap it back down, 50%. It's coming. Be ready for it. But for this to happen, what does have to happen to the USD? Yes, it has to go weak. Right? It has to go weak. It's going to be more about USD weakness than it is about JPY strength to take it all the way down. Simple as that. It's not that difficult, especially when we go to the weekly and you go to the monthly and you're looking at this level and you're going, what the hell is going on with USDJPY? right? Let me get some a little bit more data here. Look at this. Look historically to your left. Whoa, what's this? 1998. How's that for you? Anybody, what you guys were doing in 1998? See, what was I doing in 1998? Geez, that was 25 years ago. I think I just got married that year. Can you believe that? Oh, my anniversary's coming up, 25 years. 25 years, 1998. How about this one right here? 1990. What were you doing in 1990? Remember the 90s? If not, remember the 80s, 89s? How about this one? 87. All of these key levels looks good to me. I'll tell you what, you come back up here to these historical levels for JPY. This is on a freaking monthly. Are you kidding me? Especially when you cross these levels at 100% retracement. When it went from here to here, it went from here to here. This is extreme. What the hell are you doing up here? Market makers, why are you taking it this high when you got all these imbalances sitting here? Why would you leave all these imbalances? Why would you leave all these gaps? You gotta come back. You gotta come back. You did it here. You did it here. You did it here. How about here? You did it all the way here. You did all those imbalances here. You don't think it's gonna come back? Absolutely. Sell now, sell forever, sell for dear life. Hell, if I could afford it, I put a freaking 10 standard, walk away, come back in by Christmas and be like, hello guys, how you guys doing? I just made 100,000. Just like that, all right? I'm so confident with this market structure right here. Oh my gosh, it's, this is what you call an edge. This is edge like it ain't no tomorrow, right? If you ever was to see one, this is what an edge. Just if I was to, if I had the rights to the dictionary, Webster's dictionary, and it went to the definition edge, I'll just put Usdjpy 2022, October 9th. That's exactly, this is an edge. I'm like, huh? This is an edge. This is what an edge look like. You see this? What do you think is going to happen? How about 4,120 pips? How's that for you? We are going to see this. This will happen. Then we may see a little bit a pullback to this level, like this right here. Just don't look at, no, it doesn't matter. Keep going down. This is my target. Okay. You get down to this level. I'm already calling it. This is for next year. We buying. Okay. Just mark it in your book. We're not buying until Usdjpy drop below 105. Is it coming? Yes, it will. When it gets below there, we start looking for buy confluence because it's going to be looking like this, right? And then this is when we're looking to buy. We're going to take this back up, okay? And it may be like this for, this is, let me see. Ooh, look, we didn't hit this level since 2012, right? Anyway, we're going to come around this level. This is a very good, strong confidence level, and I think you guys would agree with that. Anywhere in there, there's a nice little area zone. Let's say, hey, hello, let's get here. We know that's coming. That's a 50%, okay? Other than that, that's an edge. Usdjpy, if you are not in a sell for Usdjpy, and if you're not in a sell with Usdjpy already, call me up and I'll put one for you. And I'll pay for the cost on that one. I'll take that risk. And I don't even want to put a stop loss on it. I'll put a blindfold on myself and not even worry about it. I wouldn't even sweat. Wouldn't even sweat. This is a monthly, weekly. Look at this. Daily. How much more signs you need to say this is going to keep going up, keep going up, keep going up? It may. I doubt it. The higher probability. You got to think of probability. Anything is possible, but what's the probable? Anything is a possibility, but what's the probability? Okay, that's enough on Usdjpy. Let's move on to the other pairs. What's the other pairs that's a really good edge right now? I think we're following right now on the trade plan is Usdjpy, right? I think that's what our trade plan, guys, coaching students, Usdjpy. I think that's what we're following. Look at this. This is on a weekly. This is on a monthly. Let's get some historical prices here. This is on a monthly. You know what? Scratch that. If I had the rights to Webster Dictionary and you go to Edge, I put Usdjpy. I changed that. Oh, geez. Usdjpy and Usdjpy. Look at this, guys. This right here, oh my God, this is a candlestick. Don't even worry about that one. Anyway, this is an anomaly. This is a monthly historical price for Swiss francs, all the way back dated to 1972. 1972, for those who were alive. This is what it looked like. This is what it did all the 50 years of Usdjpy, historical data that I have right here. Exactly right. Look, guys, I don't know what to say. Should we buy here? I don't know what to say. Dude, I don't know. Gene, let me borrow some money. Let me buy here. I'll buy with your money. Matthew, let me buy here with your money. Mike, I'll buy here with your money. You guys will be calling me up. You are freaking crazy. I dare you. You're not buying with my money. Not here. Okay, can I sell? Yeah, absolutely. I think everybody will send me their money. So please sell it for me. Hey, you got it. Please sell it, right? Come on, guys. Usdjpy, what do you think we should be doing? Absolutely, we should be looking for sell. Anybody. If you do have a trading account, and if you don't, please tell me you are selling. Oh my gosh. Open up a demo account, put sells on here, and dude, put 10 standards to it on a demo account and see. This is an edge. You're not going to see this again. This was we saw this in January 2015. The last time we seen this price. Dear God, people, come on, right? The last time we seen this price besides January 2014, 15 was back in 1980. Remember the 80s? I do, but I don't remember Usdjpy being this way because I wasn't even focused on Usdjpy, even if it was even given for me to trade. But I tell you what, I see it now and I know what to do based on what I've seen in the past. I want to slap this baby down. Okay? This is coming down. And it's going to come down. It's going to come down so hard, guys. I don't know what to say. But I can tell you this. 50% sounds like a very good level. Isn't this ironic, guys, looking at the monthly chart and you see something that's to the left of your 50%? Let me mark it for you. It's 50%. What's to the left of it? Oh, wow. Dude, I don't know. This is too easy. Come on. Come on, guys. You guys don't even have to be technical experienced traders to be able to tell me you see a confluence there of another resistance level price. That is backdated of 2015. Sell for dear life. Take it from here. Take a word from me. It's already dropped. It's already dropped 473 pips. It already has dropped. If you sold it here, great. Get ready to hold it all the way to 2,190 pips. I don't know, but I tell you what, guys, come to the trade room and we'll give you an update. We're watching this. This is on our trade plan. We've already got the trade plan together for it. All right. So here, it's bullish, Leonard. You should be buying. Not on a freaking dear life of my mother's grave. And she's still alive. I'm having fun with this one. This is, guys, this is sell, right? It's an uptrend. Yeah, I know. It's an uptrend. Higher highs, higher lows. It is. Yeah. I don't like I always sell into rallies. I'm sorry, that's just what my experience and my mentor told me to do. He slapped my hand every time I told him I was going to buy. He said, "Okay, go for it," and blew my account. And he said, "Okay, how did that work for you?" Maybe I should start and listen. Yeah, sounds like a good idea. Okay. All right, guys. So self-JPY. Let's look at another one. I like this other CAD JPY. Look at CAD JPY. Okay, let's go to the monthly on that one. What do you guys think? We broke the level of 2014. We actually did, yeah. We've actually broke it, and we broke it all the way past. Okay, let me back up here. Let me slow down. Okay, 2014. Want to know what that was? I'll give you a year, right? You can see it right there. 2008. What would you do if you saw it right here? If you told me you would have sold right here, and I asked you, what'd you do with CAD JPY when you got to that price? You said, "Leonard, I sold it." I'd been like, "Really? You don't see that? You don't see that uptrend? You sold it right here, and boom, guess what it did? It went against you 500 pips. Did you make the wrong call? The trade went against you 500 pips. You sold it. Did you make the wrong call? No, you made the right call. If you got out, you made the wrong call. You don't see this monthly pin bar, whatever candlestick you want to see, as long as you got a little body with a big whip, that is like a teardrop fall like it ain't no tomorrow. That is an inverted hammer, pin bar, whatever you want to call it. I don't care. Make a nickname if you want to. That is a reversal candlestick on a monthly chart. This is the only wick that went up there and just spike. Why would it spike up here? There's nothing up here. Why would it spike? I'm gonna tell you why. Because everybody was shorting right here. Everyone was shorting right here because everyone saw it. So if you're shorting right there, and you're gonna short, where are you gonna put your stop loss at? Oh, you guys like stop loss right here. You put your stop loss right here. Come on, you put your stop losses. You're not gonna put stop losses 500, but you're gonna get some. You're gonna get some traders go. You know what? I'm gonna go right here, just above the high, 200 pips. I know nobody's gonna come up here and get me for 200. How about 300? How about 400? How about 500 pips? I tell you what, the market makers cleaned house. They cleaned house all the way up to 500 pips just to make sure they got the last dip of dime to everyone. Now that they got enough money, what do you think they're going to do, everyone? They got enough money here. They've already accumulated enough money from people from here. What do you think they're ready to do now? I don't know. I think they're going to come down and get this in balance. That sounds like a pretty damn good idea. And at 50%. Sell. Bearish, CAD JPY. I'm done with talking about that one. Okay. Let's go to the next one, which is Usdjpy. Staying with the Usdjpy. Okay. We're at this key level here. Get ready to short Usdjpy. I'm bearish. Sell Usdjpy. It is coming down. We're going to come down to the level. We're at least going to come down here. If you guys see it, we go to the daily. Yes, you guys saw it on the weekly, right? It's already peaked. We're not going to come back past this level of 2014. We're already beyond the level of 2018. We're already beyond. Excuse me. We're already beyond the level of 2015. About this price right here of 2014, 13. We're right there. We're going to come down. We're done. All right. This is going to be a choke equal high. We're going to have a break constructed here. Let's take it down. Okay. Usdjpy, you can go ahead and go bearish on that one. Pound JPY. Yes, I would agree. It's not as much as it is Chef JPY, Usdjpy, CAD JPY. If you were to pick a pair out of all the JPYs, hold that thought real quick. Let me just make sure I go through this JPY pairs, and then we'll pick the best one. And you guys tell me which of the JPY pairs does give you the best edge, okay? So we just saw Euro JPY. This is pound JPY. Historical level, we're on a weekly. You guys tell me. That trend line didn't ever make sense to me from trying to follow it. But we can say this is a sell zone. I like that one. Did we hit it? Yeah, this is back in 2016. Ooh, that was a nice cash crash spike. We came back up. We're in this trend line break. Ooh, yeah, I think I like it. Guess what? It's up here now. Let me see. You see that where that red line is at? That's where price is at right now. It did a spike. I can see it come back up here, and then we'll kind of come back here, and then we're going to probably see a little bit more of this action, and then we'll probably take it back down here. Okay. So, or we may stay in this level, right, and then go back up, but I don't think we're going to go any higher than this. So if I were you, this is what I would do. If I were you, to trade this pair, this is what I would do. I put it, it's looking bullish, right? It's looking bullish. I put a sell limit order at 168 for USJPY. And then I would put a TP of 160. Sell limit order right here, 168, and put a TP at 161. 686 pips. You want to tighten that up? Sure. I'll tell you what I would do. You can put a sell limit order, 165 right here. Sell limit order and put another one. Oh, why not? Just in case. And put another sell limit order at 168 and watch this. And put your TP at right here. Put your TP about right there. 160. At 160, 161. Put it at 161 even. That's what I would do. Put 161 even right there. And that is a nice, if it goes here and triggers you in, 473 pips, guys. How about that? 473 pips. So this is what's going to happen. You want this thing to come back up, trigger you in, come down, trigger you in, come down, trigger you in, come down, trigger you in. What I mean? Sell, TP, reload when it hits the TP. Sell, reload, sell, reload, sell, reload, sell, reload. So put a TP. Every time it hits TP, just reload it. Sell limit. TP, sell limits. TP, sell limit until it breaks. We're going to come back down. Now, what if you would have done that? Let me zoom in. What if you would have done that right here? Look at how many times it did that. Let's count. You guys like to do that? Let's count that. How many times it did that? How about one here? It did all the way down, come back down. That's once. Ooh, that's twice. I'll count that as 3, 4, 5. Ooh, 6. 1, 2, 3, 4, 5. Let's say about 6 times. 6 times it did that. What do you guys think? From here to here. 478 pips times 6 times, guys. $2,868 pips. Would that have been nice? I think everybody would have loved that. All you had to do is play that reload game. Reload. I think that's what I tell you. He loves to reload. I wouldn't mind him. I love reload too. That's anytime I hit reload, I'm like, oh my God, that's money. Okay, so I am bullish on pound JPY for a little bit and then bring it down. Okay, so that's pound JPY. Let's look at NCDJPY. Yes, it is. It is money. Okay, let's look at NCDJPY. Oh, it's coming down. Yes, sir. It came up and hit this level of 2015. Nice too. Almost missed it. All right. So from that high, it already came down 668 pips. It's going to come back up, retest this, take care of this mitigation. Let's go to the daily. All right. It's going to come back up here. Maybe about right there. Come up in this area. It may come back to this area. That's fine. And then it's going to come back down. It's going to come back down to this area right there. Okay. We're going to see this. So how much more does it has to go? It's already here. It got about another 792 pips for NCDJPY. I like this. Look at this right here. We are in the change. We got to change the structure. And this is what it's going to look like. Okay. My ultimate target. It's right here. Okay. I wouldn't look for buys until it hits that target. So NCJPY coming in for 939 pips. If you're not already in the sell, you've already missed when it was up here, 683 pip move already. That edge has already been receded already. It's already coming on the way down. It already hit 50% of that move. Now, if I were to put a 50% of the total swing from this high, from this low to this high, whoa, 50%, isn't that in that range? I can't make this stuff up, guys. Bring it a little bit down right here. Oh, look, I'm going right to the tip of that. Right to the tip of this, right to the bottom of this tip. Oh my God, look at this 50%. I can't make this up. I'm not making this up. You guys are my witness, okay? I don't want people to say, man, you're just making this up. Yeah, just my witness. You guys are my witness right here. 50% key level. Put a sell now and put a TP there. You can do that. That's one way to do it. Or you can wait till it comes back up and put another sell limit order there if you want. Okay. You can put a TP right here. That's another thing you can do. Put a TP here. And this is where price is at right now. Okay, so price is at right now. I think it's going to come back. Maybe not a good time to do a sell right now. You can wait till it comes back and then do a sell. TP. This is the other TP. Comes back up, reload, TP. Right? You had a reload up here already. Right? It passed this, put a reload, TP, reload, TP, embrace this. You got a TP, come back up, reload, TP. Oh my God, this is great. All right, so good trade. I'm liking this. NCDJPY coming down, baby. Let's go. RJPY, you're next. Where you at? Talk to me. I need the charts to talk to me. Talk to me, charts. What are you doing? How is this possible? How did you come all the way up to 2014 and now you're coming down? Price is right here. This is that red line. You've already came down. How far? 674 pips? Oh my gosh, that's great. So how far more are you coming down? I don't know. Let's do this. Let's do the same thing. Let's take it all the way down to this tip. Ooh, look at that. Look at that confluence. Look at that confluence. Bring it, baby. You got about another 1,192 pips. Sell this one. Oh yeah, sell this one. Sell it now, sell it later. What do I mean by that? You can sell it here right now, or put a pin in sell at, I like this level right here, 95. And hope to God it comes back and fill you in. Take TP. And I think it's going to pass that one. It's going to come down. Reload, TP. Hope it comes back up. If it doesn't, come right here. That's fine. Reload right here, TP. Probably want to come back up from there, TP. All right. Usdjpy. She's a beautiful trade, guys. Oh my gosh. All right, so I think we went through all of the JPY pairs. By a round of votes, which one do you think gives you the best edge right now? Usdjpy, Chef JPY, CAD JPY, NCDJPY, RJPY, we just looked at it, or Usdjpy and Pound JPY, which one? Everyone, please vote. Just take a vote. You can put one, more than one pair may apply. How about that? Brad says Chef JPY. Absolutely, I would agree with you. Ding, ding, ding. That is definitely one of them. Keyword, one of them. Anybody else want to take a type? Are you guys paying attention? Anyone else want to kind of type in and take a guess? If you, I'm okay with, guessing. If you are not sure, that's fine. Just take a guess. CAD or USDJPY? Yeah, I would agree with you. So believe it or not, Brad, Mike, I think you guys can't go wrong if you pick either one of those or all three of them. You got enough money, you got enough risk, you got enough margin, take those three. He said, I'm doing all of them. You better believe it, buddy. Enjoy it. You can thank me later. I do accept thank you notes. I do. Private emails, either one, I do accept those. All right, let's look at some other pairs before we close it out, guys. But like that. Let's look at another one, guys. I'm having fun here. Okay, this is pounds, euro pound. Look at this. This is euro pound. This is on a daily. This is one of those ranging, reload TP, right? Type of deal. Since it was going up, I would have put this as a buy TP. Look at this one. This would have been a nice one. That's 727 pips. How many times did this one go? About 1, 2, 3, 4, and 5. Oh, that was nice. Okay, so right now price is right here in the middle. It's in the middle. Let's go to a higher time frame. Let's see what it looked like on a higher time frame. This is on a monthly. Let me give it more, a little bit of data here. I like that IDC. They give me a lot more data. Ooh, I love it. That's all the way back to 1975. That's great. Okay. Look at this, guys, and let me know what you think. That is the ultimate high. This is the ultimate low. What do you think? I'm bearish. Yep, I'm bearish. The stand hit it, and now it's coming down. All right, I'm there. Look at this is already, and it's already coming down. So for me, euro pound, I'm bearish, and I could be completely wrong, but I think, and I like from what I'm seeing with this technicals here. This is coming down. So this is on a daily. I want to see the breakup structure right here. It's coming down. Let's go. Okay. So for me, euro pound, I don't see this coming up any higher. If it does, this is about the highest it's going to go. And we're gonna, if it keeps right now, it just bounced off of that. It's retesting. I think it's going to come back down. If it's going to keep going up, it's not going to come any higher than that. Then it's going to come down. Okay. But as of right now, I'm bearish on pound USD, euro pound. I think euro pound is a good place to go ahead and start shorting. That means for this to happen, that means pound need to pick up strength, and I think it will. Based on this week with pound news, I'm anticipating pound GDP and news and stuff like that. Yeah, start pushing euro down. Okay, let's go to a couple more pairs. Let's go to euro CAD. Euro CAD is going to come down. It's bearish, unfortunately, right here. And then let's back up. Okay, so if you were to take a trade, if you want to get into a trade, you want to scalp this trade, your CAD is a good time to do it. I see it come down to about 132. You get about 147 pips, and then we're coming back up. It's not going to go below that. Why am I saying that? Look at this. This is on a monthly. What do you guys think? Yeah, I think so. Yeah. So that's why I'm saying if you want to short this, you can. Obviously, you'd be counter trending, but because of the scalp count for euro CAD and pound CAD, you can write this down to this order block right here. You see this cluster of orders here? You guys see it? You guys see all those clusters of price liquidity? These are all liquidity. This is liquidity area. Okay, this is what liquidity look like. You guys see that? That's liquidity. Liquidity is where a lot of orders were grabbed and accumulated. Faked out, liquidated, boom, faked out, liquidated, boom. A lot of traders lost money here. How about this one? Oof. That's liquidity grab. It ain't no tomorrow. That's a liquidity grab, liquidity grab, liquidity grab, liquidity grab. That sucks. Liquidity grab, liquidity grab. Oh, look at these. These are awful. I feel bad for traders right here. Okay, guys, imbalance right here on a daily. This is target. POI comes here. Let's take it back up, and then we're going to go higher. Okay. Oops. Yeah. So your CAD is bearish before we go high. All right. We're going to come down. Let's take it. Boom. And then go all the way back up. We're going to come back here. And then we're going to come here. And then we'll come here. It's coming to a chart near you. Okay. That's pound CAD. That's your CAD. My apologies. Pound CAD. We're already trading this, right? We're shorting this. The trade room is shorting this. We're going to take this down here. And if you shorted it already, it'd be TP. If not, we got pending buys right here, guys. Pending buy here, pending buy here. big balance here. I hope it triggers me here. I hope it triggers me here. Let's hook it up. These are what we are looking for. All right. So pound cat still bearish. All right. It's got a little bit more room to go, probably about another 57 pips. And after that, it got about another 196 pip. These are both triggerable. If that's even a word. These are both good places to place buys. Okay, let's look at a higher time frame on this. What do you guys tell me? You guys show me. Go ahead and go with a little bit more chart data on a monthly. This is monthly. This is This is 84. This is 76. This is way back to 1975. This is historically 2010, 2013. What do you guys think long term? What would you guys do? Put a 10 standard buy. Would you like that one? Put a 10 standard buy. Don't come back until next year and collect your $10,000 or 100,000. 10 standards, 100,000 is right here. 10 standards, that'd be a lot of money. Maybe 100, you know. Let me see. We'll put a trade right here. Come back. Let's go right here. What do you guys think? 2,000 pips. Not bad. 20,000. Anybody want $20,000? Put a 10 standard here. I'm just joking. I'm not obligating anyone to put 10 standard, but this is how confident levels what I'm talking about from a figure of speech. Okay, it's coming here, right here. Boom, boom. We'll come in here. That is definitely going to happen. When? I don't know. I just said it just come. I just know it is. Just from a technical standpoint, it's coming here. We're gonna be looking really nice coming here. It may range a little bit. Come up here. All right, come here. Okay, that's pound CAD. Short term, we're looking for it to drop a little bit. Pound CAD. Yeah, we're looking for it to drop a little bit, just a little bit. Go back to the daily, just a little bit. It may not even come all the way here, but if it does, great. We're gonna buy here, we're gonna buy here, and I don't think it's gonna come here. And if it does, guess what? We'll buy here again. We're looking to go up, and then it'd be nice if we can just hold it dear life, but we're not. We're gonna take some TP along the way, okay? That's pound CAD. Two more, euro odd and pound odd. This is coming back down, guys. This is gonna come back down. We gotta come back down. This is a nice move up. Don't get me wrong, pound odd was a nice move up. 1,100 pips. Okay, let's look on the weekly. We're gonna come back down. I would say about, I doubt if it comes that low. We can go to the daily. I like that one right there. We'll probably come about 50% move, about right here, this level. So we got about, maybe about, geez, I don't see it coming that low. It'd be surprising if it does come that low, 450 pips. But this way anyway, this is the break of structure. I'm not looking to buy your odd. I need it to come down. It's been up here 1, 2, 3, 4, 5, 6 days. Come back down, pound odd, come back at least to this level, and then I'll be looking to buy. This one right here or even lower. So pound odd gonna come down, and then we'll shoot back up. Euro odd, sorry. Pound odd, same thing. This is pound odd on the daily. It's nice. Look at this move. You guys would have bought it. You probably would have been afraid though. I wouldn't blame you. And I'm gonna tell you why. You see this candlestick? Look at that drop. That was a big drop. You would have saw that, probably would have had a heart attack from here. 670 pip, and then you buy it from there. I'm telling you, this is a buy. Buy. And if you would have bought it anywhere in this area, especially down here, you would have had a nice 1800 pip drop, pip pump. But who would buy here? Me, us, mean reversion, knowing why? Why would you buy here? 90% drop. Oh, that's right. Anything that's vertically or, you know, down below 90%, either vertically or down, right? It is a 50% or more. But look at these imbalances, right? So pound odd is going to come back down to this level or to this level. And then we're going back up, okay? These are the levels. Okay, so I see pound odd coming back down to 1.72. That would be a nice place to buy. Put it, you know, maybe a small one, but this is a very nice one. So this is kind of like similar to pound CAD. This at 1.68, 1.68. These are the two areas I like to buy pound CAD, pound odd. And if you look at the monthly, it's almost look like down pound CAD, to be honest with you. Look at this. We haven't seen this price as low since 2016, lower than that within 2013, 85. I doubt if it goes any lower than that. This looked like, again, these are two nice areas to where you want to buy. Come back down to the daily again. Again, these are two areas to buy, okay? Your NCD and pound NCD, and we're going to wrap this up. Woo! Your NCD, slap it down. Your NCDs, good time to sell. I'm bearish, right? All the way down to 1.67. Good place to sell. Play sell, play sell. Come on. You can't have something go up just like this. 1,651 pip without coming down, right? Without coming down. I would have been buying, selling since here. Sell, 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 sell. Couldn't sell fast enough. This is extreme level, UNCD. So it's bearish target. TP1 would be 1.69, TP2 would be at least 1.67, and then you'd be looking to buy. Okay. Right now, it didn't even break a trend line yet. Jeez. When you want to be conservative, you can wait for a break of trend line right here for your NCD, but I'm bearish. Okay, pounds NCD, last one. Look at my markup already. Look at, I'm already bearish. All right, it already dropped from here to here. It already dropped about 200 pips already, and it got more to come. Okay, look at this is imbalance right here, 50%. I'm gonna go right here, 50%. Oh, nice. Look at that 50% move. I'm not making this up, guys. Right there. Okay. Right here. Yep, swing low, swing high right there. 50%. Oops. Right there. Price 1.92. Let it drop or sell it. You can sell it right now. It would be a good time to sell to 519, right? Or wait for it to buy and put a pending buy order in this area at 1.92. So we could see some bearishness on pound NCD. If it ranges, that's fine, but I see it coming down before it comes back up. So let me go ahead and knock this out, knock this out, knock this out. Okay, that's where I'm seeing it. Or it can hit this level, come up a little bit. Could come about that area. If it goes higher, the higher it comes, the less it will come down. So these are two areas. One more, maybe about this level. Okay, what else this level? Right now, from where it's at, you can sell it, or you can sell it at 2.02. Another good area to sell, 2.04. Look at that one over here. February 2022. 2022 early this year. This is a good place to sell, right? Yep, I would like that. These are all bearish looking. It's peaked, and we are looking very well. Okay, and that's my 2 hours. Time's up, 1 to 3 p.m. Eastern time, and we are done. And oil, let's take a look at oil real quick. It did exactly what I thought it would do. Told you it would bounce. It would bounce here. And if not, it was going to break down here, but it bounced. It bounced, it broke that and went right up to 93. Okay. So here's the key level. See that right there? I'm looking for oil to drop. I'm bearish on oil. This is the area to sell. This is an area to sell if you wanted to wait. And I doubt it, but this is the area that it would to go. This is a high probability at mark this up. Okay, so oil, real quick. You can sell now, and if it goes up a little bit, you can sell again at 97. But I don't see it going up here to 103. It goes up here. Oh my gosh, gas is going to be through the roof again, guys. I don't think it's going to get that high. I think it's going to hit this level and it's going to sell down. Okay, and it's going to be in this range maybe. Okay, and what range I'm talking about? I'm talking about the 90. What did I say? $97. This is low probability, 103. Okay, it could peak up here just in case, but I don't see it going that high unless something crazy happens geopolitically, hence Russia. But right now it's 97. I know they're negotiating prices, and OPEC just announced that they're going to cut oil supply or whatever. Yeah, that's probably why oil prices dropped and broke this trend line. So we could be seeing prices come back down and be in this range. Okay. Before it comes back down again. But I want to see it come back down to this level. We will see it come back down to this level. And this is the target, my ultimate target. Okay, what's that ultimate target? Ultimate target is priced $63. Okay. Right now, it may come up and may stay in this range. So let's see it development. I don't see it breaking above 97. If it holds that level, in other words, if you wanted to wait till it gets to about 97 and place a sell there, and place another pending sell just in case it goes against you, or put a stop loss and say, okay, or you want to wait for it to bounce and reject and see it range a little bit before you place another sell, I would agree with that. But as right now, I'm bearish. I would not want to buy it now. Buying it would have been a perfect place where we buy low. This would have been a good place area to buy. This would have been a good place to buy, and this would have been a good place to buy. This is where I was talking about that it would have been a good place to buy now. If it breaks, it's coming here. It'd be a good place to buy. If it breaks, it'd be a good place to buy now. If you can weather it playing trading small. Well, we're there in inverse order now with price here. Sell here, sell here, sell here. You see it? That's what I'm talking about. Okay, so oil's kind of high. It's right back to 93. Start to fill it at the gas tank right now. Price could be going up to about 98. That is possible, but for me, I'm shorting it. I can short it, and I would short it to about 85. Right, like I said, it can stay and run in this range. If it don't break 85, then it's going to stay within this range of 97 and 85 for quite some time, unless the market makers or supply and demand takes it from a different level. Right now, oil has been announced that they've been cutting supply from last week's, or they plan to cut supply, cut inventory, if you will, cut inventory. And when that happens, price goes up. They're going to make some more money. They may take it a little bit higher and then crash it again and liquidate everyone else and make some more money, right? So that's what oil's happening. Okay, I hope that helps. Other than that, enjoy the rest of your Sunday. Traders, I see you Tuesday. Links will be posted up tomorrow for everyone else for Wednesday, Tuesday and Wednesday. Send that to support and we'll get you guys set up for the trading session for Tuesday, Wednesday, and Thursday, and we'll continue with our lessons. Okay, guys? Yep, awesome. Thank you, guys. Have a great Sunday and enjoy your day. Thank you for attending. Appreciate it. Bye-bye.